Welcome back. You tune into Market Fatafat, where we are getting you all the top buzzers in trade today on the back of news floor, on the back of technicals. And now on the technicals, we're joined by Ruchit Jain, who's the Vice President, Equity Technical Research, Wealth Management, Motilal Oswal Financial Services. Hi, Ruchit. Thank you so much for joining us. Ruchit, you've picked out AB Capital for us. On the charts, how does AB Capital look to you? Because as far as the fundamentals are concerned, the results weren't really something to talk home about. So on the charts, what do you see? It's doing well in today's trading session, but that's largely the drift of the market. It has done well in the last 6 odd months. It's given 82% returns. From here on, though, what do you see on the charts?
Yeah, hi, very good afternoon. Well, we have seen a high top, high bottom structure in the stock, and the good thing is that in this last 1.5 months, when the broader markets have seen a correction, this is one of the stock which had not seen any kind of price-wise correction, which clearly indicates that the overall trend remains very strong in the stock. And the dips towards the 20-day EMA are getting bought into, which is a positive sign. So we believe that the stock has resumed its uptrend and should surpass the 300 level very soon. So at current levels, also from a positional perspective, it seems a good buy.
Right. So that's AB Capital on the charts, but let's move on to the next counter, that is Dilip Bilkon, that is in focus today. Now, Dilip Bilkon has won orders worth 4,550 crores in the metro and water grid projects. It was the lowest bidder for a Rajasthan project in Rajasthan, and on the back of that, Dilip Bilkon is going to be in focus today.
Alright, and shifting focus then to Deepak Nitrite then, and this counter is also in focus on the back of some latest brokerage reports that have come in this morning. In fact, we have a brokerage report that has come in from Deepak Nitrite, Motilal Oswal, where they are maintaining their sell stance in the stock with a target price of 1630. They say phenolics and intermediates segments continue to face margin headwinds for the company. Management is expecting 550 crore in merchant revenue from the MIBK product going forward. The company has planned capex to the tune of about 800 to 1000 crores for the full year FY26, and the peak debt is projected to stand at about 7,000 to 7,500 crores. In fact, Motilal Oswal also says that they are expecting muted performance for the next few quarters, and hence they've gone ahead and cut their EPS estimates by 9% for FY26, and they've largely maintained their FY27 estimates. But numbers were on the weaker side. Motilal Oswal is maintaining its sell stance on the stock, and that is precisely the reason the stock is also sitting with a cut of nearly 2% in trade today.
All right, so that's Deepak Nitrite on the back of that. But Ruchit, let me come to you. You picked up Bajaj Finance for us. Tell us on the charts, what do you see for Bajaj Finance? Bajaj Finance, again, another name that is doing very well in today's trading session. In fact, all the NBFC counters, financial counters are doing well, because there is a likelihood that the consumption might pick up, on the back of the big GST boost that's coming in, and therefore all the lenders are doing very well. But on the charts, do you see this positive momentum to continue?
That also could be seen in today's price action, where we have seen a gap up opening, and post the gap up also there has been a good follow-up move where price up move has been supported by very high volumes. Now the good thing is the prices have already seen a correction from the highs in last 1 month and were trading quite close to its 200-day exponential moving average support. So the risk reward ratio in that terms becomes very favorable for Bajaj Finance for a decent move even from current levels. So the 200 DMA has become a good support base for the stock until that is intact. I think the price-wise correction has been done, and we should see a positive momentum towards 950, 960 kinds of levels in the short term.
Okay, so that's the word coming in on Bajaj Finance. The stock is holding up in trade, but let's keep it going with the BFSI sector then. And Kotak Mahindra Bank, Rabinder, this one is also in focus, and I believe it is on the back of some news. Tell us, what is the news?
Well, as Kotak Mahindra Bank is in focus, where Kotak Mahindra International Limited, which is a wholly owned subsidiary of the Kotak Mahindra Bank, has announced that it has been granted a license by the Securities and Commodity Authority, the capital market regulator of the UAE, to conduct investment fund management and portfolio management activities. And with this approval, banks become the first Indian firm to receive this license from the SCM, marking a significant milestone in the evolution of the cross-border financial services. And this development paves the way of the launch of UAE domicile fund for the retail investor, further reinforcing the UAE position as a regional financial and investment hub. So back of this, Kotak Mahindra Bank is in focus, and stock is holding a gain of more than 1%.
Okay. Okay, so the stock is holding on with gains of nearly 1.5% in trade today. But let's just put the spotlight on a whole host of steel stocks that are in focus. The likes of Tata Steel, JSW Steel and SAIL. And there is some positive news flow coming in over here, where DGTR has recommended safeguard duty on import of steel products from China and Vietnam. And this will be in force for a period of 3 years. Remember, it was in April this year when DGTR recommended 12% safeguard duty, and now they've made a recommendation yet again to the Finance Ministry, where they've proposed 12% duty in the first year, 11.5% in the second year, and it will come down further to 11% in the third year. So gradually from 12%, it will be lower to 11% by the end of year 3. Safeguard duty will be applicable on steel imports from countries like China and Vietnam. DGTR has made their submission of the final report based on the investigation that they have done, and the final call, of course, will be taken by the Finance Ministry. Positive news flow coming in over here, and you can see all of these steel stocks buzzing in trade with positive gains today.
All right, the steel stocks in focus in the back of that. But Richard, you have picked out another counter from that pack, Hindalco. Tell us, what do you see on the charts for Hindalco?
So in fact, we have seen that last week post its numbers, the stock saw a good positive reaction, and today there's a good follow-up move, where even the previous swing highs have been surpassed. In the month of July itself, 700 has been acting as a resistance, and we have managed to surpass those levels. So I think this should lead to a renewed buying interest in the stock, and moving ahead, 740, 750 could also be seen. So the volumes post the numbers have increased significantly, indicating a fresh buying interest has been going on in Hindalco.
Okay, so that's the view coming in on Hindalco, and the stock is gaining nearly 3% in trade. But let's put the spotlight on the pharma sector then. Rabinder, you've picked up Alembic Pharma for us. What is the news flow here?
Well, as Alembic Pharma is in focus, where company has received its final approval from US FDA for its abbreviated new drug application for one of its cream, and the approved ANDA is therapeutically equivalent to the reference of listed drug product Retin-A cream 0.25%, and this cream has a estimated market size of USD 9 million for the 12 months ending June 2025 according to IQVIA. So back of this approval from the US FDA, Alembic Pharma is in focus, and stock is holding with a gain of approx 1.5%.
All right, moving on from Alembic Pharma, the next counter, that is Dixon Tech, that's in focus. Now, Dixon Tech has formed a joint venture with the HKC Overseas through Dixon Display Technologies Private Limited for manufacturing display modules in India. And Dixon is likely to hold 74%, and HKC is likely to hold 26% in the joint venture, with planned investments of $31.3 million and $10.9 million respectively. Now, the transaction is expected to be completed by December of 2026. On the back of this joint venture, Dixon Tech is up and away, almost 4.5% in trade today.
Indeed, Dixon Tech at 16,749. But let's also put the spotlight on KEC International. Some big order wins coming their way, isn't it?
Whereas KEC International is in focus on the back of the order win, when company has received a more than 1400 crore order across various business, and from the T&D business, the company has secured order for the T&D projects, which include 765 kV transmission line from the marquee players, private players in India, and supply of towers and hardware and poles in the US. And for the civil segment, the company has secured a repeat order for high-rise residential project from a renowned real estate developers in the northern India. And for the cables and conductor segment, company has secured order for the supply of various types of cables and conductors in India and overseas market. So back of this order win, KEC International is in focus.
All right, moving on from KEC International to Blue Star. We have picked up Blue Star on the charts now. Richard, the Blue Star is one of the consumption names that is doing very well on the back of the big boost coming in on GST. But on the charts, do you see this up move to continue?
Well, yes, probably it should, because it's not just one trading session, but if you look at the recent consolidation in this entire segment, Blue Star has been one of the names which has showed a relative outperformance compared to its peers, where the price-wise downside was very limited. The stock did form a bottom somewhere in the month of May, and post then we have a higher top, higher bottom formation technically. So I think on the higher side, it can go towards 2100 level, where the previous swing high was there, and hence after today's positive move, which is more based on those news flows, I think there should be a continuity of the momentum towards 2,100 levels.
Okay, so that's the view coming in on Blue Star. The stock is soaring in trade today, but on that note, we need to slip into a very short break. We'll discuss many more buzzers on the other side, so don't go anywhere.
Welcome back. Here, tune into Market Fatafat. Well, the new US tariff on India should not be viewed as a reason to exit domestic equities. Jefferies strategist Christopher Wood, that's what he says, calling them instead a reason to add exposure. My colleague Varun is here with more on what the report says. Over to you, Varun.
Definitely. So Jefferies Greed and Fear report actually says that the previously discussed 50% tariff with the US are not a reason to actually sell Indian equities. In fact, they say that rather it is probably a reason to buy the Indian equities because it is their view that it is only a matter of time that before Donald Trump backs off the stance which is not in America's actually interest. Also, they say that Donald Trump has actually succeeded in bringing China, India, Russia and Brazil together like never before. On the markets, they say that actually India represents the best long-term structural story in all over Asia, and actually India has just suffered its biggest period of underperformance over the past 12 months in global emerging market context. Also, they say that the Nifty is still trading at 20.2 times one-year forward earnings, which is down from the peak of around 22.4 times which used to be in October 2021. And following previous such periods of underperformance, they believe that Indian markets actually tend to bounce back after such relative basis. So it's a time to actually buy Indian equities. Also on Fed rate, they say that the money markets are now discounting a 63% chance of rate cuts by the end of the year. Earlier, this was actually around 57%. So the hopes of rate cuts are actually now increasing, and also Jefferies believe that there could be a rate cut in the month of September in the US markets. So if you look at the overall report, it is actually positive on India, and also you will see more rate cuts. In fact, the rate cuts, hope of rate cuts is increasing in the month of September from the Fed.
Okay, so that's the view coming in on the latest report from Jefferies, Greed and Fear. But let's put the spotlight on Godrej Consumer Products then. Ruchit, the stock is up nearly 3.5% today. 1223 is where the stock is currently trading after the kind of up move that we have seen today. 1300, 1350 on the anvil, is it?
Yeah, so if you look at last 2 or 3 months, whenever the stock price has corrected towards that 1150, 1160 mark, it has managed to form a good support and has seen a good buying interest over there. So post the recent correction again during last week, same the previous low of 1160 acted as a support, and we are witnessing a positive cross from the momentum. So at least towards 1300, I think, which is the recent swing high, we should see this momentum getting continued. And if in the near future this 1300 also gets break, then that would indicate probably a bigger rally moving ahead. But at least for the short term, one can expect levels around 1300 in Godrej Consumer.
Okay, so you can look at levels of 1300 for Godrej Consumer. That's the word coming in, and the stock is already up nearly 3.5% today. But let's also put the spotlight on a whole host of banking counters that are in focus after S&P upgraded all of these counters. So we have S&P, which is upgraded rating for 7 Indian banks and 3 NBFCs. The long-term issuer credit ratings on 7 Indian banks, which include SBI, HDFC Bank, ICICI Bank, Axis Bank, Union Bank of India, Indian Bank and Kotak Mahindra Bank has now been upgraded. And the 3 other NBFCs include Bajaj Finance, Tata Capital and L&T Finance. So for all of these companies within the BFSI space, the rating has now been upgraded. And the rating has been upgraded from BBB negative, positive, to BBB stable. So that's the rating upgrade that we've seen for all of these banking counters and NBFCs. And on the back of this S&P upgrade, we are seeing that green tick come in for the entire BFSI segment.
All right, moving on then, next counter on the charts is Indian Hotels. Rachit, take us through what do you see in the charts for Indian Hotels, because Indian Hotels has seen fair bit of a correction, the time for up move now.
Yes, we are recommending Indian Hotels to buy here from a positional perspective, because already some decent price rise as well as time-wise correction has been seen since the month of January. And on the lower side, the 200 DMA has been acting as a good support for the stock, which is around 740, 750 kind of range. So here we believe that post this recent time-based correction of last 7 to 8 months, the downside seems to be very limited from here on. And those who are looking to buy such quality stocks in their portfolio from a bit mid-term perspective, maybe at least 2 to 3 quarters perspective, then these are the good levels where one should look for buying Indian hotels. So Indian hotels definitely at current levels looks quite positive. The downside seems to be very limited from here on. Good to add it to your portfolio.
Okay, so that's the view coming in on IHCL. The stock is up nearly 1%, but let's also put the spotlight on L&T Finance, and this is one of those stocks which S&P has gone ahead and upgraded, and the stock is up 5% as we speak. 212 is where L&T Finance is currently trading. Ruchit, where do you see the stock headed from the current 212 levels?
So if you look at the stock within the NBFC space, it has shown a good relative outperformance compared to other NBFC names. Last 4 months, the stock has consistently showing a high top, high bottom structure, and any declines are getting bought into. And if you look at the volume section also, whenever the stock is going up, the volumes are good. On corrections, we are not witnessing any volume selling happening. I think this should lead to a continuation of the uptrend, maybe towards 225 kind of levels, where next major resistances will come. But for current levels, it looks a continuation of the uptrend towards 220 to 225.
All right, that was the last stock of the day. Ruchit and Ravinder, thank you so much for taking the time out and joining us with all the stocks in the news today. But moving on then, focusing on the steel industry, the Commerce Ministry arm DGTR has recommended final imposition of a safeguard duty on imports of certain flat steel products for 3 years. The move comes in to protect the domestic manufacturers from sudden jump in the inbound shipments. My colleague Prakash Priyadarshi is joining in with the details.
A big relief expected for domestic steel players as the safeguard duty on steel imports likely to be continued, a very significant development coming in. In fact, DGTR has made recommendations to the Finance Ministry based on its final investigation report, where it says that the safeguard duty should be levied for another 3 years, and that should be in a staggered manner. It should be levied at the rate of 12% in the first year, 11.5% in the second year, and 11% in the third year. A very significant development coming in. You were aware that the government had already imposed a 12% safeguard duty on steel imports for 200 days, which was a provisional duty, and now investigation has been completed. Final recommendations have been made based on this final investigation. This duty will be applicable on various countries such as China, Vietnam, and Nepal to protect the interest of domestic industry. This is very significant also in the context of US government's decision to impose 50% tariff on steel and aluminum imports. So there is a potential risk of further dumping in the country, and therefore these recommendations have been made to the Finance Ministry, and the Finance Ministry will have to take the final call on this proposal.
Okay, so the Finance Ministry will have to take a final call on this, but the entire steel sector is in focus on the back of that. But shifting focus then, Prime Minister Narendra Modi's Independence Day GST bonanza is getting a big thumbs up from market voices. Hiren sees staples and quick commerce gaining, with defense and semiconductors as long-term winners. Bernstein's Venugopal Gare flags only a marginal fiscal impact while staying bullish on retail and the QSR space. And Manish Dangi says GST cuts will fire up festive demand even as bonds look set for a strong rally. Let's go across and listen into what they had to say.
While staples will benefit, but I think a leveraged play on staples is actually to buy the quick commerce and the large big box retailers. I think they should benefit significantly from the volume growth that will ensue as a result of the tax cut. So I think the entire basket should do well, in my view. I think defense is a 10-year story in India. It's a decade-plus story. It is very strategic. There will be significant investments in the entire semiconductor ecosystem.
Your fiscal deficit perhaps is a 10 basis point sort of an impact. It could have been much higher if you don't really truncate capex. So that's the broad number. I would probably say it's more or less manageable in the overall scheme of things for this year. I would say defense capex will be a bit more rigid in terms of spending given the geopolitical requirements this year. But outside of that, most of government capex could essentially see some sluggishness. Some spending towards the discretionary areas, especially retail or QSRs, which I've been selectively positive through the year because of other factors as well. Autos, not very clear as to what happens to the rates out there.
Should see a spurt in demand, and particularly it's sort of well timed because it's during the festive season. It should help actually the consumption. In India, what's missing right now in substantial manner is the leverage cycle. The corporate leverage cycle, despite very, very high margins, hasn't really cranked up in a meaningful fashion. And so the GST cut, Fed rate cut, all of this should pave way for bonds to rally meaningfully more from where we are right now.
All right, with that, it's a wrap on this edition of Market Fatafat. Shesha and I will take care leave. Thank you so much for tuning in. Don't go anywhere. Market action continues on ET Now.